Robert, let's start today with the Fed's next move. There has been a lot of discussion about a possible rate cut. Where do you stand at this point?
Yes, Susan. I think we're pretty solidly in the camp of expecting a rate cut at the end of July. Now, the big question is how much of a rate cut, and I feel very, very comfortable with forecasting a 25 basis point rate cut at the end of July in the Fed funds rate with high probability. And I think I should also say that a 50 basis point rate cut is not out of the question. And I do think the Fed is primed to move. I think the communication is moving in that direction.
Hey, Robert, let's talk about some of the data that is informing the Fed. And what can you tell us about the decrease in orders for durable goods?
Yes, durable goods orders fell again in May. That's important because that's sort of a leading indicator for manufacturing generally. And that number, total durable goods orders, has been flattish now for well over a year. Not a lot of momentum there. And so what we're seeing globally is manufacturing indicators really starting to lose momentum. And I think we're on the cusp in the US of seeing that as well.
And speaking of less momentum, let's talk about the housing market. In May, new home sales fell by 7.8%. That's a pretty significant number.
Yes, two key data points. One was the new home sales number, which you mentioned. The other is the house price index, the Case-Shiller number, still up on a year-over-year basis, up 3.5%, which isn't terrible, but it's the lowest number in a few years. And the momentum seems to be, again, on the downside. And you look at a few of the 20 cities that the Case-Shiller index traditionally covers, Seattle, the worst of those, showing no growth over the last month. And so the year-over-year gains are all now in the single figures and around, say, 4 or 5%, and some even lower for others. And so this is a housing market that's clearly showing very little momentum right now, even though mortgage rates have come down. And that concerns me because we would expect to see some opportunistic buying with lower mortgage rates. And we're seeing a little bit of that, but not a whole lot.